Hello and welcome to the Weekly Outlook. Interestingly enough, we've got tomorrow on Sunday. Obviously, this would have already happened by the time you'll be watching this. We've got the Doha Oil Summit, which could affect the commodity-linked currencies such as the Aussie dollar, the New Zealand dollar, and the Canadian. So they could very well open in a different position, a very different position to where they are at the moment. So today being Saturday, so we'll the Aussie dollar has got and the New Zealand dollar have got a bit of data coming out. We've got monetary policy meeting minutes on the Australian, and we've got the New Zealand dollar GDT on Tuesday. So, unfortunately, I can't really give an accurate analysis on that until I see where the price opens on Sunday night. But obviously, I need to record this before then. So. What I would suggest is we are seeing a bit of rejection on the Australian dollar. Monetary policy meeting minutes, I'm not expecting to be any surprises in there. The only thing that may happen is the jawboning of the currency from the RBA Governor Stevens. Now he's actually speaking later on the same day as well at 2:30, alongside, and then a little bit after that we've got BOE Governor Carney speaking, and also we've got BOC Bank of Canada. The governor from the Bank of Canada speaking as well, the Polos. So they're due to testify before Lord's Economic Affairs Committee in London. That's Governor Carney. Stevens is due to speak at the Credit Suisse Global Macro Conference in New York. And Polos is due to testify along with Deputy Governor Carolyn Wilkins before the House of Commons Standing Committee on Finance in Ottawa. So they're all finance related, so monetary policy could very well be on the tip of the tongues, and we will be watching out for that to see any changes. But like I say, until we get those opening prices, it's going to be difficult to see on Sunday. So the currencies that I want to concentrate on are the pound and the euro. They're not as commodity linked as the other three, and we've got some. We've obviously got the ECB press conference coming out on Thursday, and the minimum bid rate. Now the minimum bid rate isn't expected to change, but the press conference could very well bring some volatility to the euro. Now what we've had of late is we had a breakout of the pattern that was rejecting the 114 area, this consolidation pattern here. We finally got that breakout and it traded down, but then found support around about 112.50. It did start to pull up, but then rejected the 113.10 area and looks to be at the moment as though it could possibly be back on the downside. But what we really need to see is the price break through this 112.30 level before we can be confident with the bears. Or what I'd like to see is it to come back up and retest this 50% level. This is the Fibonacci drop here. Retest this Fibonacci 50%, which also coincides with the area of the base of the consolidation that we were having over the last couple of weeks. If I draw the line in there, you'll see how that sort of lines up with the 50% retracement. So that would be my key entry price for a sell on the euro. Obviously, what's going to happen will depend on the ECB press conference to whether they're hawkish or dovish. If they're fairly neutral and the euro rallies up to that level, then that will be an opportune time to take the sell. If they're fairly hawkish and they're quite upbeat about what's happening in the eurozone at the moment, then we could see that break that 50% and then retest that 114 and the 114.60 levels again. Maybe even break through to the 115 and 116 area. Okay, so there's a few bits there to be aware of. The pound is the other one that I'm fairly interested in, and what I would like to see happen on the pound is we've still got this referendum hanging in the balance. On Thursday next week we've got retail sales, which is expected to be slight improvement on the previous, and then going into and then on Wednesday we've got average hourly earnings, which is expected to remain the same, and claimant count change. The average hourly earnings is really the key one to look out for, because don't forget we've just had an inflation figure coming at 0.5%, which was above expected. Now the BOE, the Bank of England, may be looking at that as transitory due to the oil price starting to recover slightly, and they may not be so worried about inflation as people may think, i.e., raising interest rates to control it at this time. They were always concerned about the inflation getting out of control, which is why they were still thinking about raising interest rates when it was down at 0.1%. Obviously, when they raise interest rates, that increases the value of the currency. Now, what's weighing on the referendum on the pound at the moment is this referendum, which is due out. On whether we stay or leave the euro. That is what's weighing on the pound at the moment. If that wasn't there, then I'm fairly sure that inflation figure that came out last week would have caused a bigger rally on the pound, and we'd probably be already back up at 1.5, maybe even rallying up to 1.6 at the moment. But because that inflation is there, it's holding us back. Now, the average hourly earnings figure that's due out, average hourly earnings is a cause. Obviously, increased wages means that people will increase spending. Increased spending means prices will go up, and that's inflation. That's CPI. So when if average hourly earnings comes in better than expected, it shows that inflation will possibly get even higher in the future, which again puts pressure on the BOE to think about raising interest rates again, and that could cause the pound to rally. But like I say, because of this referendum, it's been pushed back down every time it starts to rally, and at the moment I expect it to remain, with good data, I expect it to remain consolidated around the 145 area down to the 14050 area. Now, once that referendum's over, we can expect that to rally. I will buy off these lower levels up until the referendum, and I will also sell off these higher levels up until the referendum. Now, once the referendum's out the way, then obviously it's a different ball game, and we'll be doing some analysis on that nearer the time. Okay, so the euro, the pound, like I say, the antipodons and the commodity-linked currencies, we're going to have to wait to see what happens on Monday morning. On Friday, we have got core CPI for Canada, and we've got core retail sales and CPI month on month. Most of those figures are expected to be slightly weaker, especially the retail sales and core CPI, which could cause a bit of a downtick in the Canadian dollar. And if oil if during that summit it seems like nothing is being achieved, then we could very well see that US dollar Canadian dollar start to rally back up. And at the moment, it would be a great time to buy because we're quite low down. We're almost back to the 2.8 level, which is in fact not far off the 50% on the pullback from this big uptrend that we had going back to July last year. So that would be the perfect entry place for me to get back in for a buy. So if that fits with the summit and it fits with the core CPI, then 50% level there, I'll be looking for rejection, and I'll be looking to take that for a buy. Obviously, again, the summit is going to dictate the opening price, so we'll have to wait and see where we are. It may be that it dips further down to the 61%. If there's strength if it looks like oil, they're sorting out the supply glut with oil, then the Canadian dollar could strengthen further, but then I would expect it to bounce back with a poor CPI reading later on in the week. Okay, hopefully that helps. Hopefully you make some pips, and I'll see you again next week. Cheers for now.